Welcome back. You are with Trading Hour and it's time to talk commodities. We have Manisha joining in with everything that's moving, and also, of course, along with the regular price action, what's in focus is a new scheme, an agri-price scheme which might involve state governments. Manisha, tell us more. What is this all about?
Well, absolutely. Madhya Pradesh had started this last year in a couple of crops and it didn't really work well. But the government really seems to be looking back into it. And while Madhya Pradesh last year had started this with wheat and rice, there's an expectation that you might see other crops or commodities being included into this as well. Because if you look at the whole of last year, the whole of last couple of crops for that matter, we have seen the pulses prices, the edible oil prices continue to trade just about at MSP or 20 to 30% below MSP in case of some of those crops as well. So this is a scheme that perhaps the government is looking to put into other states as well. The other state governments also have, of course, initiated or shown interest into this. Apart from this, there also is another thing, and this is about procurement. Prices have been trading below MSP. What MP was doing is that when the procurement, of course, was happening at MSP, and the gap that the prices fell below MSP was being paid by the state governments here. That's yet another thing that the other governments would be taking a look at. Apart from that, the government also has been looking at a price scheme which is away from MSP, and this would be a scheme if the prices go much higher or lower, is how would be used in tinkering of export imports, putting out stock limits, etc. So not the MSP, not the demand supply numbers, but if the prices move too high or too low is when this scheme would come into picture. That also is something that you could see being announced into this budget. Apart from that, there also is an expectation that you will see higher allocation, of course, coming in from agriculture, more for the soil card management as well, and ENAM, which of course is something that the PM himself had launched in 2016, and there was a target of 580 mandis to be connected via ENAM. As of now, what we understand, the number is only about 470. What Niti Aayog report also suggests is that 1100 mandis will be connected by 2020 is a number that you could also see coming in by this budget. Markets also expect that the Department of Agriculture, Research and Education may see a higher fund allocation. Remember, with the GST coming in, it's not too much of an expectation of or a wish list that you have seen come in for various agri sectors. So whether it's pulses, sugar, edible oil, etc., what most of them want is that much should come in sense of allocations for the research and development funds and also for the price stabilization funds. So these are a couple of things that most sectors really seem to be putting out when it comes to agri as a space. But Prathamesh Mallaswan joins us now to talk more about that and the strategies in many of these commodities as well. Prathamesh, to start with, what is your sense as a broker? What is your wish list really when it comes to the budget this time around, especially for commodities as a sector?
Morning, Manisha. I think budget will definitely have such many allocations with regards to agriculture, and many efforts, as you said, is rightly in focus. So I think this budget would again be very helpful from a farmer's perspective per se, but then it really is an event which really needs to wait and watch for any further reactions on any of the asset classes. Hence we would wait for this event more aggressively and watch what comes out of this budget for investors.
What also is your sense on the prices of some of these commodities? Because when you look at the crude oil prices, what a sharp decline is what we saw in the New York session yesterday. It's trading more than a percentage point down in Asia right now. There, of course, have been these contradicting fundamentals. On one side, the non-OPEC supplies are increasing. The US production has shown a weekly higher. On the other side, there are geopolitical concerns still coming in from Nigeria. Venezuela output has been declining. How are you putting all of this together?
I think, Manisha, all factors put together, I think the focus would now shift towards increasing production in the US. I think more of this factor seems to be discounted by oil markets. I think they have ignored the fact that US oil production will soon touch 10 million barrels per day, and this is the sole factor which would pull oil prices down. I think very soon $60 to be there on the cards for WTI. I think we would be sell on shorts and we will sell on crude oil at this levels. I think 3850, 3750 are the levels that we look for in the Indian markets.
Prathamesh, one more on the precious metal space before we let you go, and there has been a bit of a GST tinkering from 3% to 0.25% when it comes to diamonds and gemstones. Of course, the gold as an industry is expecting a lot as well. Going forward, when it comes to domestic factors, how would you see this impacting prices?
I think, Manisha, despite the domestic factors with regards to GST demonetization, I think in 2017 we have imported close to 750 tons, which is far way below the 1,000 tons that we used to import, but this still is a decent amount of imports that's being consumed by India. But taking into consideration the factors per se, I think the near-term correction seems to be there on the cards for gold as well as silver. I think 29,200 and 29,000 mark are the target points, and hence you would be advised sell side on gold, while as far as silver is concerned, trading at around 39,000 mark. I think the possibility of it going towards 38,500 followed by 38,200 looks very much likely, so it will sell on both these metals.
All right, thank you so much, Prathamesh. So it's a sell call really coming in for the precious metal space and crude as well. So commodity prices, non-agro especially, is not going anywhere.